What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now, we are back today with a crucial market update, as we're going to use some on-chain data to show you guys where I think the exact bottom will land for Bitcoin. We have Quant partnering up with yet another major traditional finance player, and Binance CEO showing his true colors, as just a couple of weeks after he attacked Crypto.com and tried to cause a bank run, he has now tried to do the same thing for Coinbase, ironically at a time that his platform is being red flagged in certain countries that Crypto.com has received regulatory approval in. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Wednesday, everyone. If you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto squad, and I love and appreciate you all. Now, with that, we're going to hop right in here with the content, and starting off with the question of the day: do you think that Ethereum will break below its June low of 880? Let me know in the YouTube comments down below. We know that while Bitcoin is already well below its June low, Ethereum is still holding above it, so I do want to know what you guys think about Ethereum specifically. But with that, we are going to hop into the charts here, starting off with Bitcoin. And we actually are up decently on the day today. We are up about 2.36%, sitting now at 16.58K. We actually do have the altcoins making a much nicer bounce here on some of them. We have Matic, I know for sure, is ripping. Polkadot has also seen a nice move to the upside. But do keep in mind that even with this move to the upside, yes, we are still well below the June lows of 17.5K. And until we actually see Bitcoin show any sort of significant strength, I don't think the rest of the crypto market is due for any sort of a reversal. So the range we've been talking about here on Bitcoin is between 15K and 17.5K, and we obviously sliced through 17.5K like butter off all the FTX news. And since that was the June low, that did act as a quote-unquote local bottom for June, July, August, September, October, a very strong level of support. You can now expect that it will act as a strong level of resistance moving back to the upside. I simply don't think that in terms of the micro, we are anywhere near ready to break above 17.5K. There's still a lot of unwinding that needs to be done in the crypto market, still a lot of unwinding that needs to be done in the macro with the broader economy, and I just don't think that Bitcoin is going to make that move to the upside. I think it is much more likely that we test 15K before we test 17.5K, and based on all of the minor capitulation that we did talk about in yesterday's video, I do actually think it's quite likely that we break below 15K. You guys know that I have my first major buy zone for Bitcoin at 12,000 and my pretty much absolute bottom level at 10K. And we do have some on-chain data to indicate that in and around 11K will be the Bitcoin bottom, which we're going to break down in just a couple of minutes. But do keep in mind that we are effectively in uncharted territory here when it comes to Bitcoin. Let me just clear up the chart so I can show you. You're going to see, for starters, this is the first bear market in history that Bitcoin has broken below a previous cycle all-time high. So we started that trend when we broke below 20,000 here back in June. Then we also got to talk about the fact that we are below the 200-week moving average for a sustained period of time. And it's not super clear on this chart, but I actually did pull up another chart here from CoinGlass. And you're going to notice that pretty much any time since 2011, had you bought Bitcoin at the 200-week moving average, you would have been clean in the profit after a couple of months, a couple of years. It has pretty much always acted as a very good buying opportunity. This is the first time in pretty much 10 years that the 200-week moving average has not acted as a strong level of support. So yes, we are definitely in a very unprecedented time right now in the crypto markets. Even if you have been around for a while, you would not have ever seen Bitcoin in this situation. So this is new to everyone at the moment, and that's what I'm looking for on Bitcoin. Given the sort of like extraordinary weakness that we've seen, I do believe we are set to move lower. Now, taking a look at Ethereum here as well, I mean, we're also below that 2018 all-time high of 1,400. We are also well below that 200-week moving average, sitting at 1,332. The only thing we can say for Ethereum is that we are still well off that June low by quite a decent amount, actually. I want to say by about 30% we're off that June low, now about 25%. So still above that June low, which is definitely a good look for Ethereum. It has showed some outsized strength in this bear market after the transition to proof of stake. The first big call we did make on Ethereum here after this bear market rally rally from 880 up to 2K was a nice clean short on Ethereum from 2K all the way down to that 200-week moving average, and we have now sliced below that like butter as well off the FTX news. So I do think it is more likely that if Bitcoin is going to retest and potentially break below, I mean not retest, but test 15K for the first time and break below it, I think it is more than likely that Ethereum comes in for a retest of the June low sitting at 880. But you guys know, if you have been watching our videos recently, that Ethereum does tend to capitulate harder than Bitcoin near the end of these bear markets. You can see it here near the tail end of the 2018 bear market. It dropped here from like, let's say about 880 all the way down to 200, and then boom, it took another 50% haircut down to about $100 before we actually saw the accumulation phase begin. So for ETH to actually drop another 50% from here, that would already put it roughly in that $600 range, and that is what I am looking for on Ethereum. Now, hopping into some of the data here, I want to start off with the Bitcoin monthly returns chart, because we did say that October would most likely be a green month based on history, and that did in fact play out with a slightly muted green month of about 5.56%. Now, November and December do tend to be months where we see very big moves on Bitcoin, not specifically one way or the other, but you're going to notice that almost every single November and December, with a couple of exceptions, you actually tend to see about double-digit moves here on Bitcoin, with actually 2016 and 2021 being the exceptions for November, and 2018 and 19 being the exceptions in for December. Actually, both times here with a 5.15% move, ironically. But the point being here is that what tends to happen in these months is whatever direction the crypto market is headed in, you can pretty much bet on November and December to outsize these moves, to make more aggressive moves in this fashion. So what I am expecting from November here is an aggressive double-digit red month, and we're almost done the month. We're down 19.05%. So do keep in mind that even with this bounce that we have seen in the past 24 hours, yes, we are still down a fifth of the Bitcoin price on this month alone. And unfortunately, I do expect December to continue this trend. I do think that December is going to be another red month for crypto. And guys, I mean, I know that on this channel we've been talking about lower prices a lot. Please keep in mind, you know that I am a crypto maxi. I am a perma bull. I am simply here to just, be realistic, honestly. And these bear markets do tend to really wipe a lot of people out. People who get too fancy, people who try to call the bottom too early, people who go all in at certain prices do tend to get smoked in these bear markets. And that is why we are playing it patient, waiting for these cheaper prices, because the crypto market has been here before. It will be here again. And in the bear market, there are really two main strategies that I do try to deploy. And the first one is shorting to make some passive income even when prices are going down. And the second one is using this profit from shorting to actually roll that into long-term projects that I will be waiting for just to take profit on in the next bull run. And that's why I'm not really in any rush for these cryptos to move to the upside. And I just simply don't think that we are there yet in the crypto market. So I would definitely just be playing this one patient personally. As we can see here clearly that Bitcoin does like to make some pretty big moves in November and December. And if we just look at 2022 as a whole, I just really don't think that that move is going to be to the upside. So that is what I'm looking for in terms of Bitcoin really up until the end of the year. You can also see here that for the first time in history, Bitcoin has broken below the rainbow chart after coming dangerously close here a little bit back in September. I did say that I suspect Bitcoin is going to break below this rainbow chart for good, and in fact we have finally seen it break below the rainbow chart. We broke above it once here in 2013, and now we have in fact broken below it, effectively finally invalidating the original rainbow chart here on the log scale. They did in fact make a Bitcoin rainbow chart version 2.0 that is actually better fitted with the logarithmic regression, but still, I mean, this is not the original one, and they did have to fine tune it because yes, Bitcoin is in an unprecedented period of history once again. So now we have broken below the rainbow chart, effectively invalidating this as any sort of accurate indicator for the price of Bitcoin. Now, what you can see here is that this is historically the optimal time to allocate to Bitcoin. And I do kind of say this to err with caution because, once again, history does not really have as much of a big impact in this kind of market where Bitcoin is sort of doing things for the first time in history. but historically, all prior Bitcoin cycles had bottomed by this point in the halving cycle. We have less than 100 days until all the other cycles went back to the upside. And basically what he's saying here is that this could create for a very juicy buying opportunity. Now, this is something that I do tend to agree with. I mean, the big thesis for me here is that the next Bitcoin halving is going to ignite the next bull market. And you can see that's not set to happen until 2024, about March, based on the rainbow chart here. So I do expect that over 2023, it is still going to be a rough year for crypto, a rough year for the economy as well, for the broader economy and markets in general. But I do think that by the end of next year, things will begin to sort themselves out. And then we have the Bitcoin halving, which historically does tend to ignite bull markets. And you can clearly see that here based on the previous data of the Bitcoin halvings. So definitely something to keep in mind. I don't think that we are at that buying opportunity yet, but I do think we're getting close, which is why I'm telling you guys to stay vigilant, to stay focused, and keep paying attention, because I do think it's going to get worse before it gets better. But I do believe that we are getting very, very close here. Now, another thing that I want to show you guys is the Bitcoin price drawdown from its all-time highs. So it is down 76% from its all-time high with that $16,000 price tag. Compared with previous cycles, then you can see next cycles had a smaller drops from those all-time highs. So in 2011, right here, Bitcoin was down 93% from that all-time high. In 2015, down 85%. In 2018, down 82%. And we are currently down 76% from that all-time high. And effectively, what this means is that Bitcoin actually has to go to 11K, and it's only going to match the last cycle's decline. And if you actually pay attention here to the chart on Bitcoin, let me pull that up for you guys, because you know that I have sort of like the first buying target at 12K and then the second buying target for Bitcoin at 10K. And ironically, the sort of like the on-chain data and the previous bear market history does indicate that somewhere in 11K would actually make for a much cleaner bottom. And that is definitely the range I am looking for. Anywhere from $12,000 to $10,000 is where I personally am waiting for Bitcoin. And this is despite two top 10 coins going to zero and a top 2 exchange, plus multiple top VCs collapsing. This is still the lowest decline by percent in Bitcoin's history, and people are already calling Bitcoin dead. I think it is quite the opposite. I think despite all the horrible things that have happened in this bear market, it indicates to me a ton of resilience and strength, as we have seen a lot more Bitcoin moving off exchanges. We've seen a lot more new people buying Bitcoin, a lot of the whales buying Bitcoin, and pretty much an all-time high here for dormant Bitcoin, indicating that people are simply buying it and moving it off exchanges and holding on to it, because we have seen people begin to understand that Bitcoin is a store of value. So definitely very bullish long term, although things are not looking super bullish at the moment. Now, we're also going to talk about Ethereum here real quick, which after the massive FTX sell-off that did cause a ton of on-chain activity, we are now beginning to move back to the upside in terms of this inflation rate. You can see that at the peak here, we had actually burned off about 61.55 Ethereum since the merge had gone live. We are now 69 days into the merge, having burned off 39.95 Ethereum with a current supply of 120.5 million. So Ethereum, once again, I think that just like Bitcoin, Ethereum is going to remain the king of DeFi for a very long time, just as Bitcoin is the king of crypto. And you need to remember here that Ethereum, we're pretty much looking at a whole new ETH once we enter the next bull run. We have never seen Ethereum in a bull run with these tokenomics. Right now, nobody's paying attention to this because there is so much other stuff going on, but I still think Ethereum is probably the biggest blue chip, sort of like easy money play in the crypto markets. I don't think there's too much need to get fancy and be looking at these altcoin gems. I think Ethereum is going to be a solid top performer in the next bull run, and easily one of the safest performers as well. I mean, it's Ethereum. And the matter of fact is, if Bitcoin and Ethereum fail right now, the crypto market does as a whole. So I think that they're easily the safest bets, and will probably still be some of the best gainers in the crypto market whenever we do sort of reverse. So Ethereum is definitely one that I am super bullish on, especially given this transition to proof of stake. As over time, I do think that Ethereum will be deflationary on a more sustainable basis, especially once we are in a bull market with more on-chain activity. So and sort of going to create this snowball effect in the market here where more people use Ethereum, more Ethereum is burned, making Ethereum more valuable. Ethereum goes up, more people buy Ethereum, more people use it, which makes more on-chain activity, and then you guys see how the loop goes from there. It's just an infinite cycle of more on-chain activity, more burning, more scarcity, price goes up, and that's what I'm waiting for when it comes to ETH. Now we're going to talk about my favorite Ethereum altcoin, and that is Quant. As you can see, once again, this $100 level acting as a solid level of support. We are now up 10% from that level. I do still suspect that Quant is going to have a difficult time actually breaking back into this uptrending channel that has really been a very accurate indicator of price movement since that June bottom at about $43. Now we are currently sitting at 110. The next level of resistance here sits at 128, 130, let's say, and that is also aligned with a strong level of resistance at the charts. It is aligned with the bottom of this uptrending channel as well as the 200-day moving average. So definitely I think the 130 is going to act as a little bit of a battleground for Quant. I think even if we make our way back up there, that we won't necessarily break above it, and then even if we do, we actually do have 150 as the next 50-day moving average as well as a level of resistance. So definitely a lot of overhead resistance here on Quant, and I do think that as the crypto market is set to go lower, that we could see a retest of $100. Below that, I'm looking for $85, and below 85, if we actually do see this greater capitulation that I am looking for, I will be looking for $65. That is where I personally will be loading the boat on this project. Now, last week we spoke about Quant actually having connections to a lot of traditional finance players working on a new digital dollar pilot, and the first one here being the Fed Reserve, as MIT is working with Quant on CBDC design and with the Boston Fed on a digital dollar. And this is obviously, the new pilot is through the New York Fed, but you have to imagine that the banks compare notes on projects of this magnitude. Then we have Citigroup. Quant is a key member of the Latin America chain and will be launching the Latin American dollar in 2023. And the Latin American dollar opens payment and remittance corridors between Latin America and the US, with Citi acting as the backbone for the latter. Then we got HSBC also working on this digital dollar project here. Not a surprise, they are the largest bank in Europe with over $11 trillion in assets. They recently partnered with Oracle to digitize their entire banking infrastructure. Oracle uses the Overledger and Quant for smart contract and digital asset interoperability. And then we got MasterCard also in on the digital dollar project here. Gilbert Verdian, the CEO, and Martin Hargreaves, the CPO, both worked for VocalLink, a subsidiary of MasterCard. So their connections at MasterCard run deep. Their connections with all these traditional finance players run deep. And I really do think that Quant is going to absolutely melt faces with the partnerships, with the Fire tokenomics. I mean, this CEO has so many big connections here, and the technology is impressive. I think it is just a matter of time before Quant and the Overledger really are just sort of like at the center of the traditional finance system that currently is in place. I think Quant is definitely here to shuffle up the game, and we can see here based on the new partnership with UST that is being used to accelerate the adoption of institutional digital assets across financial services. So UST Global is a technology consulting firm with 30,000 employees and 80 offices in 30 plus countries. And you can see here the official announcement on the Quant website that they have partnered with this company to provide technical integration and tokenization services to central and commercial banks and capital markets participants. Now, why is this a big deal? Well, UST works with companies to identify their core technology challenges and craft disruptive digital solutions. And that is exactly what the Overledger is here to solve, a ton of solutions that will come facing the blockchain as businesses adopt them. They have 140 plus clients in the Global 1000, spanning numerous sectors, including financial services, healthcare, telecom, manufacturing, and retail/CPG. They have created $1 billion in value for clients, 140 plus clients in the Global 1000, and an average of 10 plus years for their client tenure. Now, UST also has made strategic partnerships with Microsoft, AWS Cloud, Salesforce, and SAP. This new partnership between Quant and UST fits the mold of the brilliant strategy strategy we've seen from Quant executing successfully on for years. Join forces with enterprises who have already built a massive global network of their own, and then build on top of that and show them the value that Quant does have to offer. So thank you for the thread, Greg Lunt, a big Quant bull here on Twitter that really breaks it down great. But I mean, Quant has just been absolutely smashing out these partnerships in the bear market. One of the most impressive teams that has continued to build right alongside Polygon. And if you actually take a look, both Matic and Quant have been two of the best altcoin performers in the bear market. And I don't think that is a coincidence. I think it is because of these outsized partnerships, because they continue to build in the bear market. And I think it is going to greatly benefit them whenever the bull run does reignite. Now we're going to wrap things up here talking some centralized exchange news in the form of Binance, FTX, Crypto.com, and Coinbase, as CZ, the Binance CEO, has once again taken to Twitter after he actually attacked FTX and was right about that. He then attacked Crypto.com and caused a bank run there. He turned out to be wrong about Crypto.com, and now he's trying to flood Coinbase, actually accusing them of lying about the Bitcoin reserves on their balance sheet. And I think he is really starting to show his true colors here and show that while he is fighting for the crypto industry, he is mainly fighting for his platform. And even if that does mean that he has to undermine the crypto industry to do so. So we're going to start off here with this very interesting read about how Singapore Central Bank talks about defending red flagging Binance but not FTX. And this was obviously a massive oversight on their part, as FTX was an incredibly shady platform. We were calling out Sam Bankman-Fried on this channel for months actually before the collapse of FTX, and now I do have my eye on CZ. I don't think that Binance is going to go belly up, but I do think that he is beginning to reveal himself as somebody who really does have his platform's best interest at heart, even if it does mean undermining others in the industry, and that is definitely not healthy for crypto as a whole, coming from the CEO of the largest crypto exchange. So you can see here that the Monetary Authority of Singapore actually said Binance, which did operate a Singapore-based platform since 2019, withdrew their licensing application last December, leading to its closure in February. The firm had received a temporary exemption from the licensing process while its application was considered. The MAS said that Binance failed to comply with their anti-money laundering standards, claiming the exchange has been denied. Sorry, these are claims the exchange has been denied. Now, despite not holding a full license, Binance offered crypto trading pairs in Singapore dollars and accepted Singapore-specific payment modes. MAS said that Binance's Singaporean subsidiary continues to offer unregulated activities in the region. And this is definitely very on par for Binance here, as they were actually operating in Ontario up until 2021, where they weren't actually banned from Ontario. The Ontario Securities Commission said that it would stop opening new accounts for users in the Canadian province. The dispute between Binance and the OSC started in June of last year, when the exchange announced their decision to quit Ontario after a regulatory crackdown on crypto exchanges in the province for allegedly failing to meet their security laws. So it's not like Binance walked away, turned around from operating in Ontario. Rather, the OSC actually said that Binance would no longer be able to continue operating in Ontario for failing to meet their securities laws. And this is very on par for Binance. They are operating in Singapore still without that regulatory approval. They were operating in Ontario until they were pretty much forced to close their accounts and actually not allow people to open new accounts here. And I do think that the way Binance has gone about business is going to land them in trouble in certain countries in the future. We know they're also being investigated in the UK and in the US at the moment, so it definitely appears like there are a lot of eyes on a Binance right now. Now compare this to Crypto.com, who has received in principle approval from the Monetary Authority of Singapore, so they are in fact working with Singaporean regulators. They are able to offer a range of payment services with the Payment Services Act, including the digital payment token services to customers in Singapore. And Singapore is said to have a very tight regulatory approval line here. Even the CEO of Crypto.com said it himself, that they set a high regulatory bar that cultivates innovation while protecting consumers, and their in-principle approval of our application reflects the trusted and secure platform we have worked diligently to build. We look forward to continuing to collaborate with MAS and deepening our roots in Singapore, a flourishing market for fintech innovation, renowned for its well-regulated business environment. So this is the difference right here between Crypto.com and Binance. Crypto.com is learning from Binance Binance and doing things properly by actually receiving that regulatory approval and then operating in these countries instead of doing it the other way around. And this is a strategy that I think is going to pay off for Crypto.com in the long run. Now, you can also see here that Crypto.com was the first global cryptocurrency platform signed to the OSC undertaking for these operations in Canada. And you can actually confirm this here right on this website. So here is the Ontario Securities Commission site, and you can actually see if we scroll down, these are the following crypto asset trading platforms that have received exemptive relief to offer crypto products to investors in Ontario. All of these are in fact Canadian companies. Crypto.com is the first global crypto company that has received that regulatory approval. And this once again just highlights Crypto.com's a very impressive strategy in the bear market. People don't care about security in bull runs. They care about security in bear runs when we actually see, or bear markets, when we see these exchanges collapsing left, right, and center. And now that a lot of trust has been lost with FTX, I think a lot of people are going to focus on security and regulation of these platforms, which Crypto.com definitely does have unlocked. So we can see here they have received this approval in Italy, Greece, Cyprus, Dubai, Australia, South Korea. Like, the list just goes on here. Now we got Ontario, Singapore as well, and I do the Cayman Islands. I mean, we could just probably keep going here. There are so many I can't even remember them all. But the main point being is that I really like Crypto.com's strategy of keeping their head down and gaining that regulatory approval and just focusing on their business. While it does appear like CZ, ironically, even though Binance is the number one exchange, it looks like he's more focused on other people's, on other businesses' operations. So he says here that Coinbase custody holds 635k Bitcoin for Grayscale. 4 months ago, Coinbase has less than 600k Bitcoin, just stating news reports, not making any claims. Glassnode probably has more up-to-date data. And then he goes ahead and tweets right here, Brian Armstrong just told me the numbers in the articles are wrong. Deleted the previous tweet. Let's work together to improve transparency in the industry. So you would figure that someone like CZ would actually go ahead and double check his sources here before citing sources like Finance or Yahoo Finance and Bitcoinist.com before tweeting something like this and spreading a ton of FUD in the market. You can see here that following the tweet, Coinbase stock actually dropped about 3% on the day. And yes, I definitely think this is market manipulation by CZ. A lot of people are beginning to see that he has really just been attacking these exchanges. And the thing is, when it comes to FTX, listen, he was right about that. He was right about FTT token. I'm not surprised because we had been talking about Sam Bankman-Fried on the channel for a while. But the point being is that after he forced FTX into a liquidity crunch, he did not acquire them. Okay, so he was not doing it to save FTX. He was doing it to put them out of business. That's what I think anyways. I mean, you can't confirm it, but it can definitely be very heavily implied that he was looking to remove his competitor from the map. He successfully did it. Then he tried to do the same thing with Crypto.com. It didn't work. Crypto.com had a ton of withdrawals, an effective full-on bank run, and they survived it completely. And now he's trying to do it with Coinbase as well, and once again, it has been proven completely false. So very irresponsible on behalf of CZ, somebody who really should be lobbying for the crypto industry and protecting it at the moment instead of focusing more on undermining his competitors. And we did in fact have Brian Armstrong here, the CEO of Coinbase, respond, saying that if you see FUD out there, remember our financials are public. We are a public company, and as of September 30th, they hold $2 million in Bitcoin, or $39.9 billion worth. We all need to come together to build this industry in a responsible way going forward. Be wary of false information. So effectively, here's a pretty good tweet from Bob Lucas, which pretty much sums up CZ in this bear market. So CZ, let's work together to improve transparency in the industry. Also CZ, let me tweet to millions some random FUD in the middle of a bear market in the middle of a bear market major liquidity event before maybe just reaching out to even confirm. Yeah. I mean, definitely a little bit disappointing, but once again, more bad press for Binance does mean more good news for Crypto.com. And once again, I think this really just does validate Crypto.com's strategy of keeping their head down and not worrying about the competition and focusing on their own platform. That is why I remain bullish on Crypto.com, on Crocoin, and on the Cronos chain, and I really do think that they are setting themselves up to be a powerhouse in the next bull market. So on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Wednesday, and I hope to catch you in the next one. Peace out for now.